Welcome back to Investing Talk Podcast. Today, we're taking a limb at a company that, well, brings a lot of joy to millions of pet parents, Chewy. We're going to explore what you should be watching out for as their upcoming earnings report gets closer. We've gathered, the latest analyst views, their past performance, market signals, all that stuff, trying to give you a clear, concise picture. Before we dive in, though, if you find what we do valuable, please think about subscribing, maybe liking this, leaving a comment. It genuinely helps us grow. And hey, if you want to support us a bit more, you can always consider buying us a coffee. The link's usually somewhere below. Plus, seriously, if there's a specific company you want us to look into for a future segment, drop it in the comments after this intro. We really do look at those suggestions.
Yeah, and it's interesting, isn't it, how much info is actually out there before the earnings call even happens. We can use all that to sort of piece together a picture, even when, the market seems pretty uncertain. This time for Chewy, it's about understanding that whole mosaic.
Okay, let's unpack it for Chewy then. When are we actually expecting this report, and what are the key numbers everyone's watching?
Right, so the projection is for before the market opens on Wednesday, August 27th, 2025.
Yeah.
And based on the consensus view, analysts are generally looking for revenue around $3.1 billion.
Yeah.
And for earnings per share, the EPS number, that's hovering around $0.33.
Okay. $3.1 billion revenue. Is that pretty much what Chewy themselves guided for, or is there a gap?
Good question. Yes, that lines up exactly with management's guidance for Q2 2025. They gave that $3.1 billion figure and an EPS range of $0.30 to 35 cents. What's interesting is that their guidance when they gave it was actually a little above what the street consensus was back then. So they nudged the bar slightly higher themselves.
Got it. Now, any whisper numbers floating around, those unofficial hints of a potential surprise?
For this quarter specifically, there isn't really a distinct, widely circulated whisper number for EPS. Often, with consumer tech names like Chewy, you might hear chatter about a number maybe 5 or 10% above the official consensus. But this time, we don't have a specific value really making the rounds. So it seems we're mostly leaning on that official consensus.
Okay, so stepping back from just this report, what about Chewy's track record? How have they done historically with hitting or missing these numbers? Does it even matter for the stock?
Well, that's where it gets kind of interesting. Looking at the last 4 quarters, it's really been a mixed bag. Hitting or beating the numbers hasn't consistently led to the stock doing well afterwards. Take Q1 2026, reported back in June. They did beat EPS estimates, came in at $0.35 versus $0.34 next expected. Small beat.
Right. So how did the market react to that beat? Positive?
Well, initially, yeah. There was a small positive gap up at the open, but those gains just faded away during the trading day.
So the beat didn't stick.
Exactly. It suggests maybe the market wasn't overly impressed, or perhaps it was already priced in. Some underlying caution, maybe.
Okay, what about the quarters before that one? Same kind of pattern?
Pretty much, yeah.
Yeah.
Q4 2025, they had another small EPS beat. Revenue was in line. But the reaction after earnings? Negative. The stock sold off, and it kept going down the next day, too.
Wow. Okay.
And Q3 2025 was actually a slight EPS miss, a small negative surprise.
Yeah.
That led to a clear downward gap in the stock. It recovered a bit during the day, but still down. And Q2 2025, in line on EPS, a modest revenue beat. But again, the gains just didn't hold. The stock ended up pretty flat.
That really does sound like a pattern, beating or meeting, but not getting rewarded or even selling off. So that makes you wonder, right? What about the actual business trends underneath? Are they reflecting this sort of lukewarm reaction?
Exactly. It forces you to look deeper than just the headlines. I mean, they've shown steady revenue growth mid-single digits year over year, about 6% last quarter. Okay, not spectacular, but solid. And margins have been improving slightly. We saw EBITDA margin expansion in the last couple of quarters. That shows better efficiency.
Okay, so some positives there.
Right, but here's the key concern. Active customer growth has been slowing down. Now, offsetting that somewhat, the average spend per customer is going up.
So existing customers are spending more, even if fewer new ones are signing up.
Precisely. That's a really important dynamic. It tells you something about maybe customer loyalty, but also about the challenge of attracting new buyers.
Interesting. Okay, let's widen the lens a bit. Beyond Chewy's own financials, what's happening in the bigger picture, the pet industry, e-commerce trends, anything that might influence this report?
Yeah, understanding the context is crucial. For Chewy, this past quarter wasn't about huge product launches or major M&A activity, nothing really splashy. Instead, their focus seems to be, well, doubling down on what they do. Pushing things like their AutoShip subscription platform that's absolutely key for recurring revenue, And they're also expanding into more hard goods, like toys and beds, and their own private label brands. Those usually have better margins.
Makes sense. And the general market, economy, consumer behavior, competition, what's the vibe there?
It's mixed. The pet sector and e-commerce generally are seeing these somewhat uneven consumer spending trends. Inflation is cooling off a bit, which helps, but discretionary spending, things beyond the absolute necessities, it's still a bit bifurcated.
Meaning some people are spending, others are cutting back.
Exactly. Some folks are still cautious, maybe trade down on pet food or holding off on buying extra toys. Others seem less affected. It creates a choppy demand environment. On the plus side, input costs are down, supply chains are mostly back to normal, so that helps their costs. But competition, fierce. Everyone's fighting for that share of the customer's wallet online. Interest rates stabilizing has maybe reduced some of the big macro worries we had before, though.
Okay. And how are analysts looking at Chewy right now, leading into this report? Any recent shifts in sentiment?
We have seen a couple of recent downgrades, mostly citing those concerns about slowing growth, particularly customer acquisition, but at the same time, quite a few analysts have just reiterated their hold or neutral ratings.
So kind of a wait-and-see approach.
Seems like it. They want to see the actual numbers from this report. Target price changes have been pretty muted lately, too. No strong directional bets from the analysts overall. Maybe leaning slightly cautious, but mostly balanced.
All right, let's talk about the stock itself then. What's the price action telling us? Is the market leaning one way or the other? And what are options traders betting on?
Well, the stock price for Chewy,
Yeah.
it's basically been treading water for the past month, just moving sideways. It had a bit of a run-up back in June, right after their last earnings, but since then it's just been consolidating.
So no strong momentum either way going into the report.
Not really. Kind of mirrors that balanced analyst sentiment, doesn't it? The stock seems to be in a holding pattern.
Okay. And the options market usually gives us a clue about expected fireworks, right? Big move expected.
Yeah, looking at options gives us a sense of expected volatility. The flow itself is, again, pretty balanced. Not a huge skew towards bullish calls or bearish puts for directional bets. However, there is a slight tilt towards protective puts.
Meaning some folks are buying insurance, hedging.
Exactly. Suggests some investors are bracing for potential downside, or at least preparing for volatility. And right now, the options market is pricing in roughly a plus or minus 9% move for the stock after the earnings come out.
9%, that's pretty significant.
It is. That's based on the at-the-money straddle pricing. Essentially, traders are betting on a substantial move up or down. They just don't know which way yet. Implies the market is definitely expecting some kind of reaction.
Okay, so let's game it out. Once the report hits, what's the best case, the bullish scenario for Chewy, and conversely, what would be the bearish outcome, and what's the one thing we absolutely need to watch?
Right, the bull case. Well, ideally, you'd want to see a clear beat on both the top and bottom line. So EPS maybe above $3.35, revenue north of, say, $3.15 billion. But critically, that needs to come with strong active customer growth, showing they're adding customers again. Improved profit metrics help too. And really important, positive forward guidance, especially guidance suggesting customer adds are picking up speed or spend per customer is trending higher than expected. That combo would be powerful.
Got it. Beat, grow customers, guide higher. And the flip side, what does the bearish scenario look like?
The bearish outcome would be, well, a miss on either revenue or EPS. Or, possibly even worse, weak forward guidance for either metric. If there's evidence that customer acquisition is still stuck, or worse, if churn customers leaving is ticking up, that's a big red flag. Major growth concerns there. Also, any negative talk from management about competition getting tougher, margins getting squeezed, or the economy hitting discretionary pet spending, that would also be quite concerning.
So if you had to pick just one thing, the first number you look for when that report drops, what is it?
For me, what's absolutely critical here, it's the net active customers. And right alongside that, the spend per active customer. Those two numbers together really tell the story of the growth engine. Are they bringing people in? Are the ones they have spending more? That tells you if the core business is accelerating, stalling, or potentially shrinking. It cuts right to the chase.
Okay, so pulling all this together then, what's the overall risk-reward setup look like for Chewy going into this earnings event?
You know, based on everything we've looked at the past performance, the current trends, the market signals, the overall leaning feels pretty neutral. If I had to put a confidence score on having a strong directional view, maybe a 5 out of 10.
Really? Only 50-50.
Yeah. I mean, you've got some positives like the steady revenue and slightly better margins, but that slowing customer growth is a real counterweight. and their history of mixed post-earnings reactions it just keeps my conviction pretty moderate. There are plausible arguments both ways.
Okay. So for listeners thinking about Chewy around these earnings, what are some strategic points to consider based on this analysis?
Right, strategy. Well, if you're generally risk-averse, the standard advice often applies.
Yeah.
Maybe avoid holding common stock through the earnings announcement itself. That volatility crush we talked about, where option prices deflate fast after the news, combined with Chewy's tendency for muted or even negative reactions even on beats, it can make just holding the stock a tricky proposition.
Hmm.
The risk-reward isn't always great right at the print.
And for those who maybe have a higher tolerance for risk, maybe looking to treat it.
For more risk-tolerant folks, well, you could consider hedged option strategies, like that straddle or maybe a strangle, betting on that big plus or minus 9% move the market implies. But, and this is a big but, you have to be really careful with position sizing. Because, as we saw, Chewy's actual moves have often been smaller than what the options market was pricing in beforehand.
So the implied move might not happen.
Exactly. So purely directional bets, probably keep them small. Honestly, it might be smarter to just wait, see the numbers, hear the guidance, let the initial dust settle, and then look for a potential trade setup in the following session based on the actual information.
That makes sense. Chewy's upcoming earnings, it really is more than just numbers on a page, isn't it? It's like a little window into consumer behavior, the whole pet care world, and, how even a strong brand handles this kind of shifting economic landscape.
Absolutely. And understanding these underlying currents, the subtle signals from the market. It helps you get beyond just the headlines. It lets you build a more complete mental model of what's actually driving the company's performance and its stock price.
So as Chewy reports, maybe challenge yourself to look past just the main EPS and revenue figures. Pay attention to those nuances, customer growth, customer spending. What are those numbers telling you about the future of online pet retail? And maybe even about broader consumer spending trends. Keep exploring, keep learning, and we'll be back soon with another look at what's moving the markets.